you know, the harsh reality is, or the stark reality is that Trump loves the stock market. You know, he points to it every single day of his administration, pretty much. You know, he came out this morning, even with what's going on, he came out this morning with a headline saying that he literally said that rates are too high. So he's already putting pressure on the Fed, and he's not even in office yet, to lower rates. So, but that's a lot to get our heads around. So let's go back up to like 100,000 feet. We've got a lot of things going on. We have had some inflationary numbers coming through, and I'll share a chart with you that came from Apollo that you can put up on the podcast once we're done taping. But it'll show and you've seen this chart before, Anthony. It's that chart that shows the 1970s inflation, how it spiked, it came back down, and then it spiked again. You and I lived through it, you know, we're basically on the same exact trajectory as that. The difference is back in the 70s, you know, that was a lot of that inflation was driven by that oil shock, you know, the shock that we had out of the Middle East, that we had that embargo and the Iranian. So
I want to test something on you, and everything you said is factually accurate, and everything you've said is born from real economic data between the tale of the two different economies. I want to test something on you historically. As an observer of American history, we have periods of time where there's great consolidation of wealth, and then the government comes in and intervenes. They break up monopolies, they break up trusts, they try to reorganize the social policies. They create things like the GI Bill, they create things like Social Security to try to equal things out, to provide more broader based opportunity. But I'm going to say something and I want you to react to it. Since Citizens United, which is a Supreme Court case that basically said that if you're rich, you can pour endless amounts of money into political campaigns. Elon Musk, $270 million for Donald Trump, Big Pharma dumping big money into these senatorial races, congressional races, big food. Let's put fertilizer in your
regulatory, framework. And that's just reality. So, my reaction is, yeah, we have a broken system and we need to fix it. And that's going to be a painful thing.
Out there saying, hey, the system's broken. The system's at its best when lower middle income people feel like they're getting opportunity, economic opportunity. I know Elon went from 200 billion to 400 billion in the last couple of months, but is it
what they call that? What they say that is a constant 2% inflation is the target. They want 2% inflation. Why that is, there's no good reason. You know, people have speculated many times about this, but when asked about it on 60 Minutes 1 year ago, Jay Powell was asked this exact question: why 2%? What's that magic number? And he went into some word salad answer about, you know, the real rate, or the R star rate, and, you know, the neutral rate. And the reality is, his answer was, it's just the way it's been done all along. That's what we pointed to. He said that in testimony once. It's just the way it's always been done, and it's a standard around the world. But the reality is, that's what they can get away with. They can get away with the expansion of the money supply that creates what they call 2% or more inflation. But if it gets too high, then people get unruly and they get frustrated, like they did over the last couple of years. Expense for the U.S. government, for the U.S. Treasury to deal with, it got up over $1 trillion annually, and because interest rates were over 5%. And so he wants to back those off. It's not, he has said he doesn't do the Treasury's job. That's not his problem. Although if there's a problem with the Treasury, it becomes his problem, which we've seen before. So he's thinking about that. And he's also thinking that, you know, he doesn't want to trip the economy into recession, because it'll just cause the expenses for the government to go higher because of unemployment and all the mandatory expenses, you know, all the social services expenses will go up, and your revenues will go down. Your tax revenues will go down if we go into recession. So the last thing we want to do is go into recession. He knows that. So he's a little bit, I think he was just trying to get ahead of it and use the data he had, which is lagging, and it's hard. It's just, there's a lot of noise in there. So again, I would not want to be Powell, but that's getting into his head. That's kind of what he's thinking. regardless of who's in office, whether it's, somebody with skin much more orange than mine. But the reality is, Anthony, is that every path leads to inflation. What they will allow, and I've been saying this for years. I wrote a piece called The Debt Spiral, which actually kind of kicked me off in this world here. And that was, it's 2 years ago, and the debt was at 31 trillion. It's up 5 trillion since then. And so, the problem is that we're in this situation where we're paying, the debt spiral, it's pretty simple. You've got the amount of money that we have to spend, mandatory. The government has to spend this because it's written into law. It's in legislation. It's over $4 trillion. We'll call it $4.1 trillion as of 24. Okay. And that's Social Security, Medicare, Medicaid, and other programs. Then you've got your defense spending. So that doesn't really work. You can only raise taxes to a certain point, and then it doesn't work anymore. And what that point is, it's hard to say, but we're probably not too far off it. So that's the second thing. The third thing you could do, which is what we've been doing all along, is just issue more debt. You issue more debt and borrow more money. And so that's what we're going to continue doing. However, this goes back to your point, which is that requires inflation. So why does it require inflation? It requires inflation because you must get nominal GDP up higher, raise the nominal GDP. That doesn't count inflation, right? So nominal GDP is just the dollars that are being earned. Pump money into the system, make more dollars, create higher earnings for those companies, even if it goes mostly to the upper class. And then that will give you a higher tax base. To tax that, you'll get more dollars on taxes to pay off debt that you issued. You borrowed that money years ago. So it's like if I borrow $100 from you today, right? And
it's Liam from the UK. I'll let you handle that one, James.
Yeah, I mean, there's so many ways that this can transform industries. We're seeing right now that with Bitcoin in particular, there's now this new way to store value, and it's becoming effectively it's taking market share away from gold, and I think it will do that. It'll continue to do that over the course of a number of years. But the reason for that is that it's trustless, and so. What you have to know about cryptocurrencies and the different ones, there are some that will have utility. That's reality. There will be some utility there. And so what is revolutionary to me about it, especially with Bitcoin, is that trustless nature where you have this immutable blockchain that cannot be altered, and that all the incentives are aligned. They're aligned in order to keep that, in order to keep that chain unbroken. And so you can trust them because we see all the opportunity that's in there, in this ecosystem. Well, why is that? Well, right now it's the ultimate store of value in our opinion, and it will grow to be the ultimate store of value in the world, in our opinion. And again, for the reasons I stated before. But the reality is right now it's a digital asset. It's not money yet. It may become money down in the future, but it's not generally accepted everywhere. It's it's a great store of value, but not a means of exchange yet. And so what I believe will happen is that the first thing it will do is it will take a lot of that market share from gold, and it will more than double or triple the size of gold in somewhere in the relatively near future. Not years, but certainly in the next decade or so. And the reason for that is that it has properties that are much stronger than gold and are much more advantageous to have as a store of value. To tell people who are newcomers is that Bitcoin's digital property. It's a superior form of digital gold, right? And it's shown it can no longer be ignored as store of value. right? So we're seeing it happen in real time. So I focus on the trust. I've been talking about the trust. And so Bitcoin is a rapidly growing network, and it's operated continuously since 2013. It had one hiccup then, but since then it's processed over 1 billion transactions and maintained over 11 years of 12 years of uninterrupted service. So, but why is that? It's because the network is secured by 175 terawatt hours of power. That all those computers that are securing the network, it's equivalent to 20 nuclear reactors running continuously. So, put simply, the Bitcoin network is a fortress digital of power. It's nation state level resistant, and it's growing stronger every day. So that's what he's got wrong, is people don't understand that network effect and the strength of the network.